My name is Heather Taylor. I'm from EY Canada, and my focus is sustainable finance. I work specifically in the public sector space, so sustainable public finance, but really want to emphasize the importance of public and private working together. So I'm going to ask each of the panelists in a moment to do a brief introduction of themselves, but I wanted to just give you a teaser on what we're going to talk about today. So we know that advancing sustainability is going to require the partnerships of the public sector and the private sector working together to advance on sustainability goals. And if we pretend, even just for a moment, especially today, given the inauguration, if we pretend that there is a common understanding of goals and objectives to get to net zero, to get to 2050 commitments, we know that there is a role for finance to play. And what we want to do is talk about the evolution of sustainable finance. If you think about when labeled bond sustainable finance was first introduced, it was quite immature. It was as long as proceeds and projects aligned to green outcomes, sustainable outcomes. Well, investors today are far more sophisticated, stakeholders are far more informed, and there's an increased need for accountability and transparency. And so what we want to talk about, given today's topic, really is the role of blockchain in addressing the integrity in the market, increased accountability, increased integrity. So today's panel will explore how economic transformation can actually be driven by climate finance, and how the private and the public sector working together, in actual fact, will be pivotal in advancing sustainability. So I'm going to go to Nathalie, because you're sitting right beside me. So a brief introduction of who you are, and then we'll get into questions.
I'm Nathalie Flores. I'm from the Dominican Republic. I'm appointed by my country to serve as vice chair of the UN Climate Change Science and Technology body. In this body, we moderate the whole negotiation process from science to policy. So basically, first we go with the countries under a science approach, and we study the science behind putting in place a policy, let's say oceans and climate. So first we go to the science of the ocean to then try to make a global framework of policies under the UN climate change.
Thank you. Wes?
And thank you very much for moderating and GBBC for hosting this great panel. I'm Wes Geisenberger. I help lead the HBAR Foundation's Sustainable Impact Funds, and we're part of the Hedera ecosystem. And as part of what we do is we fund a lot of infrastructure tied to not just sustainable finance, but monitoring, reporting, and verification, both in the carbon markets as well as greenhouse gas accounting. And we're very proud members of GBBC because of the great work that's going on in the standards level of that around the Interwork Alliance, both in carbon emissions tokenization, where I help co-chair the task force there, and also the voluntary ecological markets. And so we help lead on both infrastructure standards, as well as deploying grants to create new types of outcomes and use cases on top of Hedera.
Hey everyone, Sarabeth, Brockley. Currently work as a GP at a group called Investors for Climate that works to get over high net worth individuals as well as family offices and private investors at the angel level interested in continuing to staying opportunities in climate technology from APAC to North America. You might know me better as the head of carbon strategy for NASDAQ. I left that position just about half a year ago, and it's been very cool to go out on my own to do independent investing, because it's surprising when you work for a publicly traded company, the SEC doesn't let you do that. But I get to do things that are a little bit closer to my heart for companies that are emerging onto the carbon market procurement value chain, and then some plays in the biodiversity and real estate market. So again, Sandra, thanks for putting this together and putting me in, and really excited for the panel today.
Thanks, Sarabeth. Okay, Nathalie, since you're sitting right next to me, given your role at the UN, share with us how UN climate change works and how we effectively use the global framework to translate into decisions and into actionable country-specific as well as unique national circumstances.
Okay, first of all, I talk a lot, so
I'll have to cut you off.
Yeah.
Okay.
Yes, so The first thing is going back to the position itself. The countries of signatories of the UN as a system of countries came together in 1987 with the Rio Conventions, what we call the Rio Convention. So we have the UN Climate Change, we have the Biodiversity Convention, and we have the Certification Convention. So the three conventions to protect nature and specifically climate change that is supposed to drive an economic transformation, has two different bodies, which are the science and technology body and the implementation body. So the three conventions have the same thing. And then you have the conference of the parties. And everybody recognizes COP as something related only to climate change. But actually the three Rio conventions has conference of the parties. And what is the conference of the parties? Is the ministers of each country that are the national focal point to each convention meeting together, taking political decisions. And then that's why when we have a conference of the parties, we have a president of a conference of the party, and that's why it calls people's attention when UAE was the presidency of the COP, or Azerbaijan recently, but that comes from the geopolitical context in which countries rotate per region. So a country needs to volunteer to be a president of the COP to actually drive all the countries in order to make these political decisions. So we're going to Brazil next year. So it's the turn, this year. We're in 2025 already. So I'm sorry. So yeah, we're going to Brazil in November. And the whole UN system in terms of the decision, what we do as countries, because as I said before, I'm appointed by a country, is to make a global framework that then we can downscale under national circumstances to make policies under all these topics that we negotiate. So back to the UN climate change, we have around 60 agenda items being negotiated under the science and technology body, and more than 60 agenda items on the implementation body. And then after the first week of negotiations, and by negotiations I mean legal text. So that means when I was a negotiator, I was fighting for a comma. So literally, it's negotiating legal text. Because people make a lot of, crazy assumptions about what is happening at the COP, what is blocking, why decisions are not being taken. But think about 198 countries and around 20 delegates per country to attend each agenda item. It's just crazy to make people get together, come together. Another challenge on what we do as countries, and that means all the countries, is the fight between Annex 1 countries, which are the developed countries, and non-Annex 1 countries. That's how it's stated in the convention, and that's why we use that name, but the developing countries, and the fight of paying for the industrialization that developed countries already have. So usually you have the countries divided in between who needs to pay for the adverse effect of climate change. And then you have the emerging economies like Brazil, China, India, South Africa, and Russia that come together and they say, okay, we are emerging economies, we need to develop before actually reduce our carbon emissions. But the ultimate goal of the convention is reduce carbon emissions, which we are not doing. Now, the Paris Agreement, which is another legal instrument under the UN Climate Change Convention, establishes that all the countries need to decarbonize. So all countries present what we call the national determined contributions, which are decarbonization strategies, and these commitments go to develop and developing countries. So I will leave it there, because as I say, I can keep talking, but that's basically a little scope how decisions are taken to then downscale to private sector investment, driving economic transformation with low carbon economy. Yeah.
As someone who also worked for the UN, I can say that Natalia definitely rescoped the entire opportunity for what that global mechanism was, and I'm just technically backstopping you, and it's an inside joke if you know, you know.
Just think for a second, though, 198 countries with 20 delegates from each trying to come up with agreement is. So you have 5 stars against your name for patience and persistence, I'm sure. Okay, Wes, given your role in the Hedera ecosystem, think about how our industries across sectors embracing blockchain technology to advance their respective sustainability goals.
So I think you can look across the industry, and maybe I'll start in the carbon markets because a lot of times that's a big topic when you hear about COP. And I'll argue, and I'd be curious to maybe get Nathalie's opinion on this. I don't know if there's a conference focused on a specific industry that mentions blockchain more than when you're at the COP. I would argue it's the one conference in the mainstream where you would say, this sector is very focused on using this technology to its maximum potential. And you hear that in tools like registries or meta registries, which is a tool where you issue carbon credit, or you could have a national emissions registry or national biodiversity registry where you're issuing units in the case of biodiversity or metric tons in the case of emissions, and you're accounting for your stocks. And that could feed into something like a global stock take that is negotiated. And so when we think about it at the HBAR Foundation, what we're often doing is thinking about how can we build the infrastructure that could be used in every single one of each of these countries at a national level, but also in the voluntary markets, where we've built a library of digitized and open source methodologies on top of that voluntary ecological market task force standard that I mentioned earlier from the GBC. And what we do is, instead of trying to build a single solution, what we're very much focused on is building tools that allow the market to scale. Because you can't get somewhere without the road, in the same way the carbon markets can't get there without methodologies. The same thing for greenhouse gas accounting. And so a tool that we built that's well known as kind of our lighthouse or flagship solution is called the Hedera Guardian. And it allows you to write those methodologies easier. Because the one thing that we know in climate change and text negotiation is there is change. And what we invest in is tools that allow that change to happen through the negotiations and allow the infrastructure to adapt to it. And so that methodology library, which spans all the major voluntary market standards, where we have examples out for Vera, Gold Standard, the CDM methodologies, the top 20 most used, as well as the first 4 of 6.4, we've actually digitized through grants, working in partnership.
What is 6.4?
And that is a great question, because we are very good at acronyms in this sector. Article 6.4 is the International Voluntary Carbon Market, negotiated under, and congratulations to Nathalie, as well as the negotiators. After 10 years, they got through the text negotiations for 6.4 in this last COP in Baku, and they're in the process of operationalizing over this year through the consultations that say these are the methodologies that we're going to use as the first 4 methodologies for this market, and then they'll be implemented. And of course, then project developers, which are local consultancies around the world, can then implement these tools, these frameworks in communities where they drive that change, where they're reducing or removing emissions through different methodologies, which is really just programs, procedures, and practices that calculate the reduction of carbon. Now, at the HBAR Foundation, we spend a lot of time on emissions as well. And as part of the Carbon Emissions Task Force, we're also working with corporates, whether they're small corporates like small and medium-sized businesses or large multinational companies, to calculate Scope 1 direct, Scope 2 indirect, often focused on energy, and Scope 3 indirect emissions across what we call value chain emissions. And we're oftentimes spending time on digitizing those same methodologies, which could be 10,000 plus procedures or applications or calculations of emissions. And if you really just take a step back, what the HBAR Foundation is doing is we're taking the real world workflows, mapping them to an accounting mechanism, and getting to an inventory cryptographically secure on a public ledger. And where that becomes important is when we have these global negotiations, or a specific country says, I want to reduce emissions and actually prove the integrity, we're focused on how we get to the balance sheet of our planet, which is our mission, is to bring that balance sheet of the planet to the public ledger. And when we look at different outcomes we can create tied to project finances, well, what we can say is, because we have the rules and the data digital, now we can start to bring finance into play, where we can then correlate dollars, which may come across a public ledger in something like a stablecoin, to a specific account that's also emitting data in the context of a methodology. And so that's where we spend a lot of time, effort, and money. And a couple real world use cases that, I'll be brief because I know I can also talk a lot, is we work with project developers, for example, in the voluntary carbon market like Alcott, where they announced last year that they're bringing 500 million metric tons as part of their entire portfolio to Hedera. And they're working oftentimes with projects in the global south, oftentimes in South America or Western Africa. And they're saying, across all these methodology types, across all these projects, how do I prove that what's happening is true so a corporate can go buy an offset and actually say, this is high integrity, it's following a methodology, it has optionality to either enter the voluntary market or 6.2, which is the country-to-country mechanism where one country sells to another under the Paris Agreement, or potentially even in 6.4 if they want to transition that project over. And it gives an optionality to prove not just through the methodology, but based on high integrity data, that what is happening is true, and I can point back to the exact moment when this piece of data was collected.
That's awesome. I want to talk to you about the voluntary carbon market in a moment. So Sarabeth,
Hey.
share with us, given your role in investments, share with us what are the most pressing areas for sustainable finance today? That's a loaded question, I know.
We all have loaded questions, so I'll just try to circle this back to my own unique part of the world, and it's likely going to focus on carbon with that lens. But I think for some of the family office sentiment that we're starting to see, that chain of confidence really does mimic what we're starting to see in the corporate level, what we're starting to see on the supplier base. So these two types of economic forces that are coming into play. Others are looking at how they diversify or divest some of their portfolios and start to interact and be more responsible for the type of carbon that they produce, consume, and be better business players in general. So looking at that portfolio and fiduciary management level. I will say one line that's been repeated to me by a dear friend, but deployment moves at the speed of trust, and I think that's probably where a large portion of why we're even with GBBC today is that mantra is very important. And when I got my first taste into more sustainable investment and financing pieces, it was truly at NASDAQ. And this idea that the minimum standard of care that you can raise for a financial institution from when you're looking at a barter system. So if you have one good in one space and you want someone else to purchase it, you have to ensure that that transaction is trustworthy. And how do you do that? So you have mechanisms that underwrite that digital infrastructure. You're doing that increasingly through tokenization, digitization, and blockchain. But how the investment community can start playing in that means supporting the ecosystem that provides those enabling characteristics to exist. So what is that? Are those technologists? Are they project developers that are giving integrity over because they're starting to follow methodologies that was set at the universal level at the UN and going top down? Or is it through a rogue group of stakeholders that think that the regenerative finance space really needs to be prioritized because the type of access isn't there. So when you think about you purchasing something, you trust that that local entity data, that is the piece of purchase that you're doing that works on a stock exchange, it works if you're trading something with your friend, it's that piece of trust that you've digitized. And when I think about so much of emerging market technology that we would utilize in Uganda or in Kenya when we were working with the exchange, a large portion of that was just getting cotton farmers to digitize their trust relationship. And I see that a large portion now in the investment space and what we're looking at in the carbon market is really just getting to the bottom of how do you get that unique parcel of information in a way that you can check out where does it come from, who bought it, who sold it, why did they leave it, why did they downgrade the asset, and being able to unpack that piece of information all within a click, all within a delivered package, and with the assurance that somebody who has purchased that before also went through the same robust methodology. So what excites me now? People who are building that infrastructure space. So I'll shout out a couple of companies. Alcove is a digitization infrastructure company that's looking at making it easier for suppliers to go through their auditing piece, carbon suppliers, I'll put it this way, but you can imagine it for the biodiversity chain. If you're looking at, I won't even say it, water assets. NASDAQ has an indice for measuring water in the American West. Please don't look at it, it's not very accurate, because we know that most indices need to have high velocity trading in order to work. Right now the carbon market's stuck because it's over the counter. But that's going to change, probably, I give it a year. We're looking at moving that very quickly now that these pieces have fallen into place. Multilateral oversight, UN, market makers in the in-between, so the enabling ecosystem, and then people who have money who finally trust it. And it's all coming together. I don't know if that was helpful. I also like other companies, but I feel like I just shouted out one. Please go invest in them.
So I'm going to change gears. I'm going to ask each of you maybe in 60 seconds to answer this next question. So what role does emerging technology play, such as blockchain, AI, IoT, in supporting sustainability solutions? 60 seconds.
Tough. We need a workshop. So next year, we have to book a workshop over here for this. Yes.
That sounded like a demand.
Yeah. So from the multilateral perspective, we actually need the technology in-house. As I say before, and as I said last year when we were talking about the DMRB and this same scenario, we literally need to get the countries up to speed into invest into this type of technology, but they need to be taught. Like developing countries do not have access to this.
Yep.
So they are still reporting on Excel spreadsheets. And then the convention needs to round that up into other Excel spreadsheet to make it accessible for everyone, because not everyone can access the technology. So I think it's a great technology. As you see, like we take the decisions to actually put in place policies in the countries. You have the investors, you have the masterminds like Hedera, Guardian, the finance and everything, and then you have the regulators still doing things manually. So there must be something that comes along the way that help them to transition from not having the funds, public funds, to actually invest in this and prioritize how we can get up to speed. Because if not, we will never trade carbon and we will never remove it, which is, as I said at the beginning, the ultimate goal of the convention.
Okay, Wes?
To make it simple, I think we need to get from truth to value. And from an investor perspective, if you can't get from what is that ground truth to value, you're not going to invest in it. And so from our perspective, it's investing in methodologies, because if you don't trust the methodology, you can't trust the data. If you can't trust the data, that's where your truth lies, in the context of the methodology, to get to a quantitative reduction, which is that asset that we're supposed to value. And if we can't take that asset, put it, whether it's in an index, in another vehicle, it's going to be hard to invest in it on the front side of it, which is still a growing market of project finance. It's a $14 billion market up over last year that is a small piece of the larger sustainable finance market, which went over $1 trillion in green bonds for the first time last year. So again, growing despite any political conversations. Those are both growing markets. And to get to that value, we take these assets and put them into other pools that then can get to corporates or any other investor for trading purposes. And I think that key is from truth to value is where we use blockchain and DLT to get to that outcome.
Great. Sarabeth?
Yeah, I want to see us take back the mysticism and like kind of maybe like the bad character name that commodification gets when we talk about nature assets and other capabilities that are maybe more, they maybe exist more in a moralistic argument, because we're increasingly getting to this space in which we allow ourselves to know that something like the carbon procurement value chain, what you see in front of you is a carbon procurement value chain. We want that more, and we want more of that, and we want it replicated across that stakeholder universe, whether it's carbon, whether it's water, whether it's nature, or whether it's a potential sustainable token or something else that backs up a level of integrity that you wouldn't trust it otherwise unless it had that data stream behind it. So I'll definitely leave you with this. The Millennial Development Goals had like 2 data points that you looked at for like 15 years. 2015, you got the Sustainable Development Goals. It expanded out to 17 different objectives and thematic pieces, and that was because of the power of data. Suddenly, at the Secretariat level, they wanted to know if you were measuring, did you have water? Millennial Development Goals. And transitioning into the Sustainable Development Goals, that was, do you have water? How far do you have to walk for it? Did it have high turbidity? Did it taste good? Was it laced with heavy metals? You're getting all of that data chain trust and a mechanism that continues to build on it. So what are we going to see for 2030? I don't know. You'll have to ask Nathalie, and maybe she'll be leading that motion.
Okay, I'm going to switch gears one more time. I have one last question, each of you. How can the blockchain space itself live up to sustainable aspirations? Because in and itself, how is it going to, in actual fact, walk the talk in the sense of energy efficiency, social impacts, et cetera?
I don't know, but for me, you already say it. So, to walk the talk, first, you have to make your operations cleaner. So, if you need energy, if you need everything around the energy to actually build on digitalization, then you need to invest in carbon, perhaps, and also have in place something that, because you can do renewable energy yourself to actually make the technology cleaner, but also you can do the investment like the Symbiosis Coalition, that it's a group of companies that are coming together within a specific standard to leverage investment in carbon and then neutralize their operations. And these are the biggest technology companies in the world, and I see the blockchain that way as well. So I think the tools that are there, you can put your own tools in place, but definitely look into the COP28 decisions on transitioning triple the time to renewable energy, and you can do it from any business, including blockchain.
Perfect.
I think from a blockchain perspective, we needed to look at where we've gotten in the last year and how it's going to go ahead. And for us, we've invested in that methodology library to collect all this data in context. But that means also making sure that that same context, whether it's in project finance, where tools like Evercity have brought together dozens and dozens of projects to put their data in a format that financiers can access it, issue debt, they can be bought. That's something that's happening today. Now, to get that to scale, we need to access new pools, get away from the OTC market, and I think that's where blockchain is going to connect finance and the data structures that are necessary to prove high integrity outcomes. Now, how we get to scale on that is when we have a national country registry under, say, Article 6.2 or a national biodiversity registry, those assets need to live on a public ledger, not just as tokens. And this is a really important point. It's not just a token, it's data tied to methodologies where everything is attested on a public ledger. Because if it's not on a public ledger, you're going to have a really hard time taking that unit and rationalizing it back to the community that it's impacting, both finance going to the community and data coming from them to prove the high integrity outcome that they're creating for our planet.
Yeah, all those things are so beautifully said. I will say it again, deployment moves at the speed of trust. Like, that piece is so, I can't underscore it enough as that opportunity that we're moving into. But again, for me, blockchain is just one more piece that's in that toolbox to either underwrite the financial trust and ecosystem of the stock exchange, make sure that those local parcel data pieces are true, tried, collected, trusted, but verified. I like the final opportunity of what I think blockchain is, and it's now become kitchen table conversation, where it was very, very otherworldly or mystical beforehand. And we're seeing that language capability change, where people are a little bit more conversant, they're willing to take more shots on goal, and again, we're taking back that word commodification and bringing it into a newer, trustable, and universal space.
That's great. Okay, so I'm going to wrap up. Thank you so much for your perspectives. I think it's very, very clear that economic activity will drive, or sustainability will drive economic activity, but it is all about trust, integrity, and blockchain is the tool that in actual fact can unlock and advance that trust. So hopefully we've piqued curiosity, we've planted a few seeds of ideas, but everybody is accessible for questions after. So thank you.
Thank you.
Thanks, Heather.
Thank you.